keynote speeches will continue, and next I'm going to invite my co-worker, the Director of Research from the World Platinum Investment Council, Edward Sterck. He will be talking about the importance of China for the investment case for platinum.
Thank you very much, Grace, and thank you all for the fantastic organisation and the opportunity to present to you today. The topic of my presentation is the importance of China to the investment case for platinum. In the course of this presentation, I'm going to take you through the global supply-demand fundamentals for platinum and China's significant role in the platinum market as the world's biggest end user of platinum. Before that, however, I would like to say a few words about the World Platinum Investment Council, or WPIC, for any of you in the audience who are not familiar with us, particularly with what we do outside of China. After, of course, just directing you to the sleep-inducing disclaimers on these slides here. Right, so WPIC. We were established in 2014 by a group of South African PGM miners. You can see our current list of shareholders on the left-hand side of this slide. Our initial mandate was to grow the investment demand for platinum, but this has broadened recently to include advocating for the hydrogen economy and hydrogen demand for platinum. How do we work to grow investment demand? In two ways. Firstly, we work with partner organisations such as mints, refineries and bullion dealers to help them to produce and sell platinum, predominantly to retail investors. And you can see a selection of some of our Chinese partners on the right-hand side of this slide. But we also partner with organisations all around the world. As you can see from this map, which also includes some financial partners such as ETF issuers. The second way in which we work to encourage investment in platinum is to engage with institutional investors, pension funds, hedge funds and the like. We do this by providing detailed technical research that allow institutional investors to make informed investment decisions. The key target is to increase liquidity in platinum markets, which in turn opens up platinum as an investment to larger pools of capital. We have four main research publications. The Platinum Quarterly is our flagship publication, in which we present a one-year forward supply-demand outlook. This is provided to us on an independent third-party basis by Metals Focus. We then publish two reports that are based upon our own analysis. Platinum Perspectives is a short document focusing on current market-influencing events, one page of text and one page of charts, whereas Platinum Essentials goes into different market-influencing factors in more detail. We publish our own 2 to 5 year supply-demand outlook through Platinum Essentials. The final research publication is 60 Seconds in Platinum, which is concise research oriented more towards a social media and retail type of audience. All of these publications are translated into other languages, including Chinese, Japanese, and Korean. Turning then to the platinum markets and the role that China plays in them. I appreciate that many of you probably know a huge amount about platinum, but it has such varied end uses. It's worth beginning our platinum market analysis with a short, high-level recap on platinum's myriad of end uses. The most significant end use at present is exhaust treatment systems for internal combustion engines at around 40% of total demand. This is the first of platinum's environmentally critical roles, working as a catalyst to reduce harmful emissions from the combustion of fossil fuels. Secondly, platinum is also used in a number of industrial applications. Industrial end demand has been growing at a 5% CAGR since 2013 and is projected to be 32% of end demand in 2023. This is the broadest category of end uses, which range from platinum's catalytic properties being used to accelerate reactions in the petroleum, petrochemical and chemical industries, thereby reducing energy needs or increasing yield, to medical applications such as cancer-treating drugs and implants. Further industrial applications also include platinum being used in the glass industry, as we heard earlier, for the production of high-quality glass fiber and LCD screens, to spark plugs and various sensors in vehicles. It's also used in proton exchange membrane electrolyzers for the production of green hydrogen. Thirdly, platinum is used in jewellery at around 23% of end demand. Platinum is particularly favoured in the mountings for high-value precious gemstones, as its strength makes it less likely that a setting will break and that a high-value stone will be lost. Lastly comes investment demand. This is really the most variable of end demands, at between negative 10% and positive 20% of total demand. Let's turn to the flow of material in the platinum industry. As you can see from the left-hand side of the schematic, primary mine supply, which accounts for 67% of supply, is sourced from only 4 main regions of the world, making it highly geographically concentrated. At 70% of the total, South Africa is the single most important contributor to mine supply. Russia is second at about 11% of the total. Recycling plays a major role in platinum supply at 23% of total supply. Most recycled platinum comes from spent auto catalysts. Demand is positioned on the right-hand side of this schematic. I won't run through all the demand details again, but just highlight that there is a significant amount of internal recycling in industrial end uses. This is important for 2 reasons. Firstly, it shows that platinum very much sits within the concept of a circular economy. Secondly, it shows that industrial demand is predominantly linked to the timing of new facilities being constructed and populated with platinum, with only a small amount of ongoing additional platinum purchases needed to compensate for any losses that occur during the production process. So that's the overview of material flows within the platinum market. Let's zoom in a bit and focus on China's importance to global supply and demand fundamentals. I'll start with supply. As you'll have seen from the previous slide, China is not a material contributor of mined platinum to the global markets. This means that recycling supply is the area that China has the greatest role to play on this side of the supply-demand balance. Given the rapid changes in vehicle emissions legislation in China, the vehicles currently being scrapped in this country are not thought to contain significant amounts of platinum at present. However, China does have a major role to play in jewellery recycling. This is pretty small, at only around 5% of total supply, but China makes up a significant portion of that, in fact the majority of it. Compared to the rest of the world, consumers in China are far more likely to sell back old jewellery to fund the purchase of new jewellery. Turning to demand, China is significantly more important in terms of demand. In aggregate, we estimate that China accounts for around 28% of total demand, depending upon the year, or around 2.3 million ounces out of a market totaling around 8.2 million ounces in size. This makes China the single most important end market for platinum in the world, which also means that the platinum market, i.e. producers and end users in the rest of the world, have to care a lot about and pay attention very closely to what is happening in China. However, China is even more important to the platinum market than I just showed you on the previous slide. This is because, according to trade data, China has for a number of years been importing significantly more platinum than its identified needs. This chart shows quarterly platinum imports in the columns. The total height of the columns represent total imports, with the blue parts representing identified demand, and the pink parts excess imports. So why has China been importing so much more platinum than it needs? Well, I will theorise a little bit, but before going into that, just a little health warning. Trade data does need to be treated with a bit of caution, as it aggregates a lot of nuanced data, but I think the order of magnitude is quite a good indicator of a trend that has been ongoing. So to my theorising, well, firstly, real demand could be a bit higher than identified demand. Secondly, there may be some buffer inventory building by end users ahead of expected deficits. And thirdly, there could be some quasi-speculative aspects to the platinum accumulation, again, in anticipation of upcoming deficits. So as stated, these are just theories, but let's assume that all of these imports are indeed excess to demand. Well, the significant levels of excess imports into China means that the great majority of above-ground stocks in the world now sit in China. On our estimates, more than 80%. Okay, that sounds like a pretty significant number, but what does that actually mean? What are above-ground stocks? Well, we need to look at the importance of China to platinum demand and talk about platinum supply-demand fundamentals on a global basis before answering that question. Firstly, a little background on how we generate our supply-demand outlook. As an industry representative organisation, we need to be extremely cautious of antitrust legislation. This means that our one-year forward supply-demand projections are produced on an independent third-party basis for us by Metals Focus. Metals Focus is an internationally recognised agency providing deep dive analytics on the precious metal markets. They use a bottoms-up approach with boots on the ground, where they engage with supply chain participants to build out a comprehensive forecast for supply-demand fundamentals in any given period. Thus, any projections that I'm about to speak to for 2023 are metals focuses. Anything for 2024 and beyond are based upon WPIC's own in-house analysis of available public data. Starting with 2023, based upon Metals Focus's outlook, we're expecting a platinum market deficit of almost 1 million ounces this year. That's a little over 30 tons. This would be the greatest deficit in history in ounce terms, and at 12% of demand, the joint most significant year with 1999 and 1983. This record deficit is a product of 28% year-on-year growth in demand, in combination with mine supply being constrained at 8% below long-run production rates, and recycling supply also being constrained at 8% below average annual output of recent years. So why is supply so constrained? Well, firstly, as we've heard previously today, electricity shortages in South Africa are limiting output, and sanctions against Russia are putting limits on production ambitions there. Both of these production headwinds seem set to continue for a while. Secondly, a shortage of end-of-life vehicles and a scandal in the US scrap industry are limiting scrap supply to the market. Turning to demand, a 28% year-on-year increase in demand might seem pretty surprising, given the challenging economic environment. However, automotive demand, which is up 12% year-on-year, is being driven by ongoing substitution of platinum for palladium in gasoline exhaust treatment systems. For background, platinum has in recent years been mainly used in diesel vehicles and palladium in gasoline vehicles. But the price premium of palladium over platinum is incentivizing automakers to substitute where possible. To our understanding, this has been more of a theme in the US and China than in other geographies so far. This has been accentuated by regulatory changes in China, resulting in a greater percentage of heavy-duty and non-road vehicles using platinum-containing exhaust treatment systems. Industrial demand, up 17% year-on-year, is being lifted by significant capacity additions in the chemicals and glass subsectors, with many of these capacity additions being in China. In fact, 2023 is projected to be a record year for industrial demand. The important point to make is that these capacity additions are already committed to and substantially complete. As I stated earlier, industrial demand is dictated more by capacity additions than ongoing demand. So a hard economic landing is more likely to have an impact on 2024 and 2025, for example, through perhaps the delays to new capacity additions, than it is on the current year. 2023 is pretty much locked in. There is also a significant swing in investment demand from net disinvestment in 2021 and 2022 to positive investment demand in 2023. Before looking beyond 2023, perhaps a couple of additional words on the constraints facing platinum mine supply and focusing on the electricity shortage in South Africa in particular. The crisis facing electricity supply in South Africa is very much the result of I'll start that again. The electricity in South Africa is almost entirely supplied by Eskom, the state-owned utility, and the crisis facing the electricity supply in South Africa is long-standing. The underlying cause of electricity shortages there has been decades-long underinvestment in new power generation and maintenance and under-maintenance of existing capacity. This has been compounded by mismanagement and corruption. As a result, the 60 gigawatt grid is facing significant shortages of electricity, with as much as 6 gigawatts of capacity regularly being missing from the grid. Reacting to this, Eskom has been enacting rolling blackouts, which are termed load shedding, as well as curtailing power to large industrial users, with platinum mines being significant consumers for the smelting of PGM-containing ore. As can be seen on this chart, hours lost to load shedding year to date are almost the same as for the whole of 2022, and we're only halfway through the year. Furthermore, the severity of load shedding has increased. Load shedding at level 4 and above is the point at which we think that mining operations begin to be impacted by the electricity shortages. Year to date, we've already seen twice as many hours at these levels than in the whole of 2022. Can we expect this situation to improve? Well, the short answer is yes, but not soon, and it will remain volatile. We're seeing a brief respite as severe storms provided 900 megawatts more wind power And thermal coal plants have increased efficiency in colder weather, and of course it's the winter in South Africa at present. Longer term, the mining companies are all planning on installing their own power generation, most of it renewable, but these projects are not coming online in material volumes until 2025. And Eskom's problems are unlikely to be solved in the near term. In short, South African platinum mine supply is likely to be power constrained for at least 2 more years. So the outlook, according to Metals Focus, is for a deficit of almost 1 million ounces in 2023. Well, what about 2024 and beyond? We're now moving into our own in-house WPIC estimates. This chart needs a bit of explaining. What you're looking at is the year-on-year change in total supply and total demand. Clearly, both have been pretty volatile in recent years. But aside from a supply increase in 2024, we don't see much change in supply-demand fundamentals going forwards. Why the supply increase in 2024? Well, to put it simply, we just use the midpoint of public company guidance for mine production. And aggregating all of that just points to an increase in output in future years. Given that electricity challenges are likely to continue in South Africa, there are obviously clear risks to the downside to these projections. We also assume a normalization of recycling rates, which have been suppressed versus historical levels. So this results in an increase in total supply of 10% by 2025. But we also assume a hard economic landing holds back jewellery and industrial demand, although automotive demand continues to grow on ongoing substitution and some early fuel cell electric vehicle demand. The net impact the net result is for deficits to continue at between 500,000 ounce and almost 1 million ounce a year for every year between going forwards. That's between 15 and 30 tonnes approximately. As a reminder, this outlook assumes a normalisation of electricity supply. So just wrapping things up and bringing it back to above ground stocks. The concentration of above ground stocks in China means that the rest of the world is potentially facing a shortage as the deficits unfold. To put this into context, by the end of this year, above ground stocks in the rest of the world would account for only 6% of rest of the world demand. Sorry, 6 weeks of rest of the world demand. So clearly getting very, very low. As a final comment, I just want to make a quick, just touch quickly on the hydrogen outlook for platinum. So the important source of future demand. And the key thing to highlight here is that on our projections, with some pretty modest assumptions, we see hydrogen demand for platinum reaching effectively about 30-35% of total demand in the 2030s, which could be significantly higher, especially when you take into account the investment support provided by the Inflation Reduction Act in the United States and similar legislation in Europe, and clearly the continually accelerating plans in China. How important could hydrogen be for global decarbonisation? Well, in our estimates, if all green hydrogen plans come to fruition, and I think that's a bit of a stretch target, then we'd potentially be looking at green hydrogen contributing up to 11% of the savings, the CO2 savings needed to meet the 2-degree warming scenario outlined in the Paris Accord. And with that, I'll thank you very much, and please don't hesitate to reach out if you have any questions.